So the whole world is hyped up on the AI trade. The whole world is hyped up on crypto trades, Bitcoin to the moon, right? Everybody's expecting Bitcoin to hit 250,000 by the end of 2025. I'm recording this on September 14th, 2025 to let you know that they're all fucking wrong. And I'm going to reveal 5 simple trades that will absolutely blow Bitcoin, okay? And will absolutely outperform the AI trade that is so fucking overcrowded. So consensus never helps you put together big trades. And there's time in the markets that everyone is overlooking something that could be driving the market. And that moment is here. We've been talking about stagflation for the last few years. But recently, what's notable is you have a lot of people with some crazy historic record that are joining our stagflation case, such as Ray Dalio over the course of last 48 hours, voicing his stagflation playbook. Now, I'm here to tell you guys that Bitcoin should have been way higher by now, considering that there's so many crypto treasury companies that have been buying it and accumulating it and buying it and buying it and buying it. If Bitcoin had a chance to hit 250,000 in 2025, it would have already done so, okay? Now, I'm not going to reveal all the proprietary information here. I'm just going to say that if you study history, you will be able to nail trades that are not consensus type trades. And those are the trades that will put the most money in your account as a trader. So my prediction, number one, is that gold will absolutely smoke Bitcoin in 2025, or at least between the time I'm recording this podcast, September 14th, okay, through the end of the year. It's gold that's going to be the next Bitcoin, at least temporarily. And I'm basing this because it appears to me that everyone is focusing on the wrong playbook. The playbook for all the crypto groupies, everybody that still believes Ethereum is going to hit 20,000 this year, Bitcoin's going to hit 250,000 this year, the playbook is the same, right? They're looking at the Bitcoin halving cycle, counting the months, counting the days. They're looking at the Bitcoin versus Ethereum dominance, and they're looking for that to shift for the altcoin season to begin. Well, they've been doing that for the last 2 years. Okay, and they're still expecting this shit to play out, and they think that the moment is here now. I'm here to tell you they're all fucking wrong, okay? Because there's no historical and statistical evidence of how Bitcoin or crypto would actually behave in a stagflationary environment. And I think everybody is looking at this playbook that is known to everyone in crypto space, but they're not utilizing the correct context, which is the context of stagflation. So if you're a crypto trader or investor, okay, you've been brainwashed to the fucking moon thinking that shit is about to explode. Well, there's a variety of negative catalysts, and I would say the stagflation environment is one of them. I'm not saying that Bitcoin cannot go higher in the next few trading sessions, but overall, by the end of 2025, Bitcoin will be lower than what it's currently trading. And at the moment I'm recording this, it's around 116,000. And the same goes for Ethereum. It's currently trading around 4,700, okay? Now, gold, on the other hand, is trading around 36 and some change, 3,600. And I would say by the end of 2025, gold will be, check this out, close to 7,000. I'm here to tell you that gold literally will double in the next 3-4 months based off the history of stagflation. Now, for anyone that's really trying to understand this, the main discrepancy or the main miscalculation, if you will, by all the crypto groupies out there is the fact that they're looking at the interest rate cut that is coming up in 2-3 days here as something that's going to officially shift and launch one of the biggest altcoin seasons ever. And therefore, their argument is, hey, Bitcoin's still going to do good, but it's all the other coins that all of a sudden going to get this fire and they're going to fly to the moon like a rocket ship. So the reason why that's got such a low probability of happening is if you look at the correlation between gold and crypto in the last 5 to 8 trading sessions, they have actually began to develop a negative correlation. So while the majority of crypto groupie channels out there, they will tell you that, hey, look, gold is going higher, which means what? Bitcoin is soon going to go higher. Ethereum is certainly going to go fucking higher because we're flipping, into this altcoin season. So if Bitcoin's going to go higher like gold, then that means that all the other altcoins, they're going to outperform because, hey, it's the altcoin season. So they're going to even outperform Bitcoin. And basically shit is about to explode. And they're attributing all of this to the easy monetary policy, the rate cut that's coming up in a few days, and the rate cutting cycle beginning, and that's what's going to launch all this crazy bull run. Well, I'm here to tell you that none of this shit is going to happen. Number one, because it is already fucking priced in. If you think about it, if Bitcoin had a chance of really hitting 250,000 in 2025, it would have already done so. The main argument against that is, well, don't you fucking know? You must know nothing about crypto, dude, because hold on, don't you know that crypto always goes higher in November and December? Fucking always, no exceptions. With the exception that most of the people are about to find out, crypto does not go higher. It doesn't matter if it's November, December, okay? In case of stagflationary environment. Briefly to explain, you guys should already know what that is, but it's slowing economy, okay, with rising inflation. That's what stagflation is. So if Federal Reserve cuts rates, and sure, they will cut. The only question now is whether they're going to cut quarter point or half a point. If Federal Reserve cuts, inflation goes higher. Now, it's not going to save all the job losses. The job losses are going to continue, and I've been predicting that for the last few years, telling you that the job numbers have been substantially understated. And if you use just the last job revision that we've gotten by 911,000 jobs, apply it to the time frame between March 2024 through March 2025, it literally means that instead of job gains, if you also subtract all the government jobs that were reported, we actually had job losses. So negative job creation was the main theme, while Wall Street kept in error, buying the fuck out of the market on the idea of strong consumer. So generally speaking, when this myth is going to be repriced the way it should be, okay? And I'm telling you, we're days away from that, okay? In this particular case, all the historic evidence point to weaker consumer also is negative for crypto. So instead of the biggest bull run that is currently the consensus, we're about to get exact opposite of that. So you would make a lot more money instead of going long crypto here. You would go, and I'm telling you guys, this is so contradictory what I'm saying right now, that anybody that's listening, they're going to think that I'm fucking crazy. But I'm telling you that there is no statistical evidence of how Bitcoin and Ethereum and altcoins act in a stagflationary environment that is finally accepted by the market as stagflationary environment. Now, we've been talking about stagflation for the last couple of years, and more people are now joining that view, especially over the course of last 10 days. Some big names as well in the space, such as Ray Dalio in the last 48 hours, okay, joining the stagflation case as well. So I'm telling you that more and more people are going to reprice their portfolios based off stagflation. Now, what does that mean? Well, historically, the last two stagflation cases was September 2007 through January 2009. You can go ahead and pull up the chart, but I'm going to tell you exactly what happened there. And most of you should probably guess, but it's actually even more specific than what most of you probably think. Everybody knows the market crashed, but I'm going to get very specific with conditions of how that happened. And the second case is 73, 74 stagflation, which also have very similar components. So when we look at these two cases, they all started out, guess with what? They all started out with a rate cut. Okay, so if we go through 2007, on September 18th, 2007, guess what Federal Reserve did? They cut the rates. By how much? By 50 basis points. Okay, and what happened? Go look at the fucking chart. Okay, the market begins dropping, bounces a couple of times, and I mean, it begins collapsing. Now, the real collapse accelerates when Federal Reserve cuts the rates. They do, at that point, they do an emergency cut in October of 2008. And at that point, the market is down quite a bit, like 20%. And then after that, the market drops another 30% all the way through January 2009. Okay, now, understanding this information is key because you can go back through these dates that I just given you and you can go and analyze, well, what has actually happened to different assets throughout this time. And you're going to find out that, okay, well, S&P, I just told you what S&P did. You know what NASDAQ did? It actually dropped by about the same percentage, which is about 50%, right? Market dropped by 50%, give or take, on S&P, NASDAQ, Russell 2000, okay? But the worst performer was oil, okay? Oil dropped from $145 to $30 from, check this out, that happened in under 6 months, from July 2008 until December 2008. And it wasn't even, you didn't even have to wait until the end of December. Oil literally dropped by as much as close to 90%. I mean, that's how ridiculous this drop was. 80, 90% drop on oil. So, you know, the one trade that will absolutely fucking outperform, okay, is outperform the market drop. Okay, see, everybody's talking about, well, go long the market. It's the fucking AI revolution. Look, we've been through this for the last 2 years, okay? AI revolution trade is the fucking consensus. You will never make big money on going with these consensus trades that are already priced in. You will never make big money in trading if you go with what is already priced in the market. I'm here to tell you that Bitcoin and all the bullish catalysts for Bitcoin, they're already priced in, and it still cannot go higher. So how much more money would have to come into Bitcoin between now, September 14th, and the end of the year in order for it to actually hit 250,000? It's not going to fucking happen. If it had a chance of happening, it would have. Bitcoin would have already been as much money as been going into Bitcoin. So go long Bitcoin here, okay? You don't have to have no balls. You don't have to be a fucking genius, okay? It's the fucking consensus. So at the most, at the very best, you're going to get a mediocre fucking trade out of it. That's not why you come to trade with 13 market moves, okay? So looking at the missing ingredient here, okay? Again, all the crypto groupies, they're basing this breakout in the market in crypto on the Bitcoin halving cycle. They're sitting there calculating the number of months, the number of days. Oh, it's about to happen. Well, they've been saying this shit for a year now, okay? And they were saying it way before Bitcoin dropped from 110 to 74, okay? Guys, I don't have time to cover every little detail here, but the point is this, okay? Everything's priced in, and Bitcoin still trades at the moment I'm recording this at 116,000. You're going to be much better off. I'm not saying it's not going to make a double top at 125 and then drop again. I'm not, like, overall, I'm saying, okay, that you would be much better off going long gold. For the next 3-4 months, I would say gold is your Bitcoin. Gold could go to 7,000, okay? 6,500, 7,000 gold, okay? Based off some of the situations that are stagflationary. Now, if we go back in history to 73, 74, okay, you know, it's a pretty easy situation because the same thing was happening, right? They were raising rates in the early 70s to conquer the inflation. Well, they got to a point where oil prices were rocketing because of the oil situation with the Middle East, right? And it was hitting the economy so bad that Federal Reserve said, hey, you know what? We can no longer raise rates because the economy's fucking falling apart, and we're going to start cutting rates. So guess what? Federal Reserve did begin cutting rates in October 1973. Now look even how seasonality works, right? So the stagflation in 2007 begins with Federal Reserve rate cut in September. The stagflation in 1973 begins with the October rate cut by Federal Reserve, okay? And so if you look in the early 70s, Federal Reserve has been using a tightening monetary policy to conquer the inflation. So they've been raising rates by quite a bit, by 6% within those early years, in 1970 through 1973. And then basically they switched their mandate because oil prices are hitting the economy so bad. Well, some may argue, well, shouldn't oil prices go up as well? Well, it was a totally different situation. Back in the 70s, the United States was not producing, 13 million barrels of oil per day. Now, United States is in the top 3 oil producers in the world. They got freaking oil that if you were to compare it to the production of U.S. oil back in the 70s, like it was basically non-existent back then in relation to how much oil the United States is pumping right now. So in this particular case, you would go with the supply and demand situation on oil, and you've got a case that is, as far as oil concerned, resembles the 2007-2008 stagflation case rather than 1973-1974 stagflation case. But in both instances, with much so greatness in 1973-1974, gold prices, gold is the absolute winner, right? There's nothing that outperforms the market or any part of the market by far more than gold. So gold prices actually go from $60 to $180 within the time frame when S&P drops from in 1973-74, S&P drops 50%. So you have gold triples within a year, basically, while the markets drop 50%. Something else to understand about stagflation in the 70s, that S&P, when it topped in 1973, it was able to bounce to that level in 76 and 79, but it was never able, from 73 to 80, it was never able to break above that level. So what I'm here to tell you is the current market pricing, we're possibly going into a 7-year bear market, where the current levels in S&P and the current levels in NASDAQ, the current levels in Russell 2000, for sure, they're not going to be revisited for another 7 fucking years. Now, considering that, Federal Reserve now responds much quicker to any kind of tragedies in the market, like the 1987 crash, 2007, 2008 was a little bit lengthier, but still, some of these time frames could be shortened. So we may not be comparing the time frames because Federal Reserve now is so much better at responding and addressing some of the situations, basically exactly what we've seen in COVID. So maybe if we had COVID type situation in the 70s, it might have dragged out for a few years, but the crash and the COVID associated crash was only a few months, right? So what I'm saying, this 7-year bear market, because of the difference in timing and response of Federal Reserve, it may be halved. So the bear market could last anywhere from 3.5 years, but as much as 7 years. And that's what stagflation does, okay? In stagflations, the markets, they don't perform well. Now, you should know historically that from the same time, while the markets were stagnant in the 70s, could never make a new high after the 73, the market wasn't able to make a new high until we got into the 80s. That gold actually went 11x. So from 60 in until, if you go back and look at history, I think it's January 1980 when gold set the absolute fucking top that was just broken out last week, by the way, if you were to adjust it for inflation. So gold literally went 10, 11x within the same time the market did absolutely nothing. So the title of this podcast was, hey, the 5 trades that are going to make you more money than the AI trade, than the Bitcoin trade. So the first one I told you was shorting oil, because I could see oil go easily. In the next few months, oil could go down to as low as, $30-40. At the time I'm recording, oil is still around $63. So oil could easily drop 50% in a matter of a few months. So shorting oil or buying puts on oil is what we're doing. Okay, that's definitely going to outperform the AI trade, because when you buy oil puts, depending on times and expiration, you stand a chance to make as much as 1,000%, 2,000%, 3,000%. There's no way, okay, that you can buy Bitcoin and hold it, and even if the shit doubles, okay, you're not going to be able to make that kind of money. So when I'm talking to you about these 5 trades, okay, shorting oil is by far going to outperform, especially if you're able to catch and short oil on a bounce, okay? Oil puts are definitely going to outperform any AI-related trade on the call side, okay? Oil puts is going to outperform Bitcoin and crypto-related trades. The trade number 2 is gold calls, because based off the historic analog, if we look at 73, 74, okay, gold has a chance to triple, okay? Now, gold is not going to triple by the end of this year, but it can easily hit 6,500, 7,000, which is almost going to be double, okay, from current levels. So buying calls on gold in the expectation of a crazy bull run in gold would be a much better trade than actually buying Bitcoin calls or Ethereum calls or any of that stuff. So the main flaw with all the crypto analysis is that they're not looking at the crypto cycle through the lens of stagflation, because we have no historical or statistical evidence of how crypto or Bitcoin or Ethereum would act at the time of stagflation that is now becoming. We're just talking that now the stagflation is beginning to be priced in the market, okay? And that's why gold chart is the best looking chart out of anything. You can bring up any fucking chart. I mean, technical wise, gold just broke out. I mean, you made a shitload of money if you listen to the podcast or if you trade with me or any coach here at Third Year Market Moves, because we gave you the gold trade the day before gold broke out, 80 points, and now it's up 200 points since we posted this podcast, guys. That is the confirmation. That is the best confirmation of stagflation case that anybody can come in. I don't care what anybody says out there. Okay, gold is telling you that United States is in a severe stagflation case. And based off that context, if you look at gold is absolutely going to outperform anything in the near term. Not only that, gold is likely to outperform everything in the next 7 to 8 years. While people are telling you that Bitcoin is going to go to 250,000, I'm here to tell you that if we go for the same stagflation cycle as in the 70s, gold is going to be at 33,000 within 7 years. Okay? So while most of the people are in this consensus trades, talking about how Bitcoin is going to outperform gold, and they're hoping, okay, like everybody's showing you charts, oh, gold is going high. Well, guess what? Historically, that means that Bitcoin goes higher. No. Throw that base case out of the window, because I'm telling you that exactly the opposite is going to take place. Gold is going to go higher, and Bitcoin and Ethereum are going to fucking drop. And it is a lunacy of me to actually say this, knowing that like guys like Tom Lee, they're committed to buying billions and billions and billions of dollars of Ethereum in near term, that all these treasury companies that are borrowing money by diluting their shares or by selling bonds, basically using MSTR, Michael Saylor's strategy. There is a new company that pops up every day that wants to buy Bitcoin close to its all-time highs, okay? My argument is simple. If as much money as went into Bitcoin, there's over 100 treasury companies that are buying Bitcoin now on consistent weekly basis, putting billions of dollars. If under such conditions, Bitcoin is not moving up, okay, it's not going to move up to that 250,000 level in the next, by the end of this year. But what will move up to levels that nobody could even see right now is gold. And what's going to go way lower is oil. So those are your trades. Gold calls, oil puts, and guys, the next easiest trades would be shorting Russell 2000. So most of the people think, okay, well, it's the rate cuts, it's going to benefit the smaller companies. Well, it's the rate cut that the root of which is deteriorating economy. And my argument is simple. Small companies are not going to be able to do as good as bigger companies when it comes to making sales when the economy is slowing down. Okay, as a matter of fact, it is absolutely shocking that some people on Wall Street are bullish airlines. I mean, if you study history, 2007, 2008, I mean, airlines like American Airlines, I mean, I remember buying that shit for $1, and sure, it bounced, yeah, but you had to hold it for a while, right? You had home builders that were like, that are now trading at like $150. Yeah, those home builders were trading at $2. So I'm saying that there's absolutely parts and components of the market that are just going to crumble. They're going to crumble under the case of stagflation. And we're just in the early innings, okay? A guy like Ray Dalio finally comes on board with stagflation, okay? I think a lot of people are going to start reversing their positions to be able to target stagflation. And therefore, the kind of buying that you are currently seeing in gold is nothing compared to the kind of buying that you're about to get in gold and silver, okay? The kind of selling that you're about to see in oil is not the kind of selling that anybody can picture right now, because why? Well, people are bullish on oil. Why? Well, because you're building all these data centers, they need to be powered by something, which makes a strong case for natural gas prices higher and oil prices higher. But oil is telling us that we are in 2007, 2008. As a matter of fact, oil is telling us that we are in July 2008, August 2008, right before, oil completely falls the fuck out. So under such conditions, okay, that oil is really telling us that AI story is way overdone, okay? And I'm not saying that AI is not going to be, one of the greatest trades at some point. But when you have companies like Oracle that are pumping 40% in a single trading session, but then consecutively selling off 5%, each day in multiple sessions, that also is a highlight and a sign of a fucking top. So apparently, sure, people got excited about the quarter. They see the potential. They see those big numbers translate into dollars, and that doesn't stop them from selling the stock in a big way. after the initial pop. That is a sign of a top. So it doesn't matter how good the AI trade looks. I mean, there is a limit to everything, how much something can run within a specified time frame. So I think we're going to see the biggest repricing of the market. I think we're going to see people that are currently sitting on profits on all these AI trades, they're going to start taking money. A lot of that money is going to go into some other sectors. And if more people arrive at the consensus of the stagflationary case, then I really believe that the biggest beneficiaries of that is going to be gold and silver, not Bitcoin and Ethereum. So, guys, don't go with the consensus. Consensus is never going to make you big money. To summarize the few trades, guys, that are going to outperform the consensus is, again, gold calls, silver calls, oil puts, Russell 2000 puts, and selectively, like you should be trading with a coach, because some of these AI companies, they're going to drop in a big way, okay? And we're eyeballing this one particular trade that shorting AI trades could make you in the excess of 1,000% next week, guys. There is one big one, okay, that on put options could produce by as much as 1,000% on your put options. So with that said, guys, look at the historic analog. The main observation is anybody that's bullish on crypto out of their mind right now, anybody that's bullish out of AI right now, they're not paying attention to the stagflation context. And this basically means that all the high beta names, which would be AI, they're going to be sold off. Okay? I'm not saying they're going to be sold off tomorrow, but we're very, very near. And we're going to see some massive selling in this market, guys. That is not what anybody is talking about right now. That is not certainly being bearish on crypto. Arguably would be one of the stupidest fucking things you could do right now. But I'm telling you, I've looked into it, and everybody's looking at the same analog on crypto. Everybody's looking at the same shit, at the halving cycle, at the Bitcoin versus Ethereum dominance, at the money supply. They're looking at the same shit. Well, one thing is different this time. And that one thing is stagflation and the recent termination of the positive correlation between gold and Bitcoin. While most of the people are still thinking that Bitcoin is going to catch up gold on this move higher, my argument is exactly the opposite is going to happen. Bitcoin is going to drop because based off the correlation, okay, it has changed. There's been many instances, yes, when gold went higher recently, like in the last year, Bitcoin also went higher on the same day. But again, this correlation, to me, seems to be reversing over the course of last 5 to 8 trading sessions. And at the same time, what has happened in the last 5 to 8 trading sessions is more and more people and market participants are beginning to join this stagflation case. And that is why I believe the correlation between gold and Bitcoin is now a negative, meaning they go in the opposite directions. And so while majority of the people, or basically, I don't even know who's not fucking long crypto right now, besides this stagflationary environment, which people are not applying to the Bitcoin cycle, because there's not such thing in the past of Bitcoin and crypto being evaluated of what they do and how they react to stagflation. But my bet is that crypto drops in case of stagflation. Crypto does not go higher in the case of stagflation, or at least near term by the end of 2025. Okay, I think the conventional trades are going to underperform, and the unconventional trades, such as shorting oil, buying gold calls, silver calls, shorting the Russell 2000 with put options, shorting some of the I trades with the put options. I mean, those are the trades that are definitely going to outperform all the conventional trades that are being brainwashed by the news, the media, majority of the YouTube channels out there that are looking at the same things, but they're lacking the context and they're lacking the visibility for the shift in the correlation that has been there in the past. But the thing about correlations, they don't stay there forever and they change from time to time. And I'm here to tell you that as more and more people come to this stagflation case and they reprice their portfolios and they shift things out, okay, the market is not going to look in the next 3 months the way it looks right now, okay? And what most of the people believe to be this highly bullish monetary easing is actually, if we study the last two stagflation cases, they all started with a rate cut in 1973 and 2007. And I'm saying those are the two instances where the market dropped each time by 50% plus. And I'm here to tell you that that's exactly what's about to take place while the whole world is bullish out of their fucking mind. So gold to 6,500, 7,000, while our S&P target for the next 6 months is actually 3,500. Fucking crazy, but hey, you can review this video 6 months from now. But guys, I just revealed to you all of our trades. If you know specific, okay, specific, how to trade this, okay, using strikes, expirations, okay, specifics, okay, sign up to Traders with the 30 Market Moves Coach, because there's some phenomenal trades that are about to take place. So make sure you don't miss them. Trade them with a coach. Don't be emotional. Execute the plan. Stick to the fucking plan. Stick to your positions. Don't jump out of trades like a little bitch every day, every 15 minutes to an hour, okay? Stick to your guns, and you're going to be able to beat the market in a profound way. But don't ever go with a fucking consensus unless you just don't have any fucking balls, okay, to grow your account in a big way. You stay with the consensus, you may make a little bit of money, but that's not going to move your account in any profound way. So if you want your account to move in a big way, in a positive outcome and a direction, you sign up to trade with the 30 Market Moves Coach. Let's roll.